You're not confused. You're incomplete. That's the part you don't want said out loud because it messes with the story you tell yourself about being almost there. You've watched enough videos, saved enough screenshots, taken enough notes to convince yourself you're just one tweak away. But if I'm talking to you, and I am, your trading still collapses the moment it's tested. Not because you're stupid, not because you lack discipline. It collapses because there is no spine holding it up. What you call a system is really a pile of decisions that only work when you feel good. And the market doesn't care how good you feel. You might already feel that little defensive twitch, that quiet urge to prove me wrong by listing what you have. A strategy, risk rules, a journal you update when you're motivated, a rule about not trading news that you break when the setup looks clean. If this is hitting close, hit like right now. Not because it helps the algorithm, but because it forces you to admit you're listening instead of skimming. This video only works if you stay present. Otherwise, it's just another thing you nodded at and didn't integrate. A real trading system is not designed for your best days. It's designed for your worst ones. It's built for the version of you that's tired, irritated, slightly bored, slightly overconfident, and quietly hoping the next trade fixes how the last one made you feel. If your system only works when you're calm, focused, and perfectly disciplined, you don't have a system. You have a mood-dependent hobby with candles on a screen. Think about the last time you said, "I don't know why I took that trade." That sentence doesn't come from randomness. It comes from a gap. Somewhere between seeing price move and clicking the button, something took over that your rules weren't strong enough to stop. And no, the answer is not more discipline. Discipline is not a personality trait. It's a byproduct of structure. When structure is missing, emotion fills the space every single time. Most traders build from the outside in. They obsess over entries first because entries are sexy. Entries make you feel smart. Entries give you something to talk about in Discord chats. But entries are the least important part of a system. If that makes you uncomfortable, good. That discomfort is you realizing how upside down your priorities have been. A real system starts with constraints, not opportunities. It starts with what you're allowed to do before it ever considers what you want to do. You don't wake up saying, "How can I execute my edge perfectly today?" You wake up with a nervous system, with expectations, with baggage from yesterday's trades, with rent, ego, timelines, and quiet pressure to prove this is all worth it. A complete system accounts for that. It doesn't pretend you're a robot. It cages the parts of you that sabotage consistency before they ever reach the execution stage. This is where a lot of people mentally check out because it doesn't sound exciting. It sounds restrictive. It sounds like fewer trades, fewer chances, fewer moments to feel alive. And that reaction right there is exactly why most traders never build a real system. They confuse stimulation with progress. They confuse activity with control. If this is starting to sting, share the video with someone who trades like you do. Not to call them out, but because watching this alone is easy. Talking about it with someone else makes it real. A complete trading system answers questions you don't want to ask. What happens after 3 losses in a row? What happens after 2 wins? What happens when you're up more than you expected and suddenly feel invincible? What happens when you're down and tempted to make it back just this once? If those answers live in your head instead of being enforced by rules, they will change depending on how you feel that day. And that's not a system. That's improvisation under pressure. You might be thinking you already know this, that you've heard versions of it before. But knowing isn't the problem. Execution isn't even the real problem. The problem is that your trading identity is built around being right, not being consistent. And a system doesn't care about being right. It cares about repeatability. That shift alone is enough to make most people uncomfortable because it removes the ego hit that comes from calling tops and bottoms. Let's slow this down for a second. You don't need more indicators. You don't need a new strategy name. You don't need another backtest screenshot to convince yourself you're close. You need something that holds even when you don't trust yourself. That's the part nobody sells because it doesn't look good on a thumbnail. But it's the difference between trading feeling like a constant internal argument and trading feeling boring in the best possible way. Boring is not a failure state. Boring is what happens when decisions are already made, when rules are so clear that there's nothing to debate in the moment. If your trading still feels dramatic, emotional, or chaotic, it's not because markets are hard. It's because your structure is weak. And if you've ever told yourself you just need to lock in or be more patient, comment that below. Not to confess, but to mark the moment you stop blaming yourself for something that was never designed properly in the first place. Most traders don't blow accounts because they lack knowledge. They blow accounts because they are constantly forced to make decisions in real time that should have been decided months ago. A real system removes choice when choice is dangerous. It doesn't ask you how you feel about a setup. It asks whether the conditions are met. And if they aren't, the conversation ends there, no matter how convincing the chart looks. If this feels like I'm talking directly to you, it's because I am. Not to attack you, but to cut through the fog. You don't need motivation. You need relief. Relief from having to constantly negotiate with yourself. Relief from second-guessing exits. Relief from the quiet anxiety that comes from knowing your rules are flexible when they shouldn't be. A complete trading system gives you that relief, but only if you're willing to let go of the illusion of control you think discretion gives you. Before we go any further, subscribe if this is the first time you've heard trading talked about this way. Not because I'm going to hype you up, but because this channel is about dismantling the habits that keep traders stuck in the same cycle for years. And if you've been looping longer than you want to admit, you're exactly who this is for. The hardest part about building a real system isn't technical, it's psychological. It requires accepting that you are the most volatile variable in your trading. Not the market, not the broker. You. And once you accept that, everything changes. You stop trying to outsmart price and start trying to outdesign your own weaknesses. That's where consistency actually begins, whether people like to hear it or not. Chapter 2. You probably have rules. Most traders do. They write them down, screenshot them, pin them to a wall, or save them in a notes app they don't open when it matters. And because the rules exist somewhere, it feels like structure exists too. But rules without enforcement are just suggestions you negotiate with when your emotions get loud. That's where things quietly fall apart. Not in the absence of rules, but in the moment you give yourself permission to bend them because the market feels different today. If you've ever said you broke a rule but it was justified, that's the tell. That sentence exposes the entire flaw. A real system doesn't need justification. It either allows the action or it doesn't. The moment your trading requires a story to explain why this time was different, you're no longer operating a system. You're improvising. And improvisation feels powerful until it's repeated under stress. Then it turns into inconsistency disguised as experience. This is where traders get defensive again because they don't want to be boxed in. They want flexibility. They want to feel like they're adapting. They want to believe discretion is a skill they're developing instead of a loophole they're exploiting. And look, adaptation matters, but adaptation happens between sessions, not during execution. A system evolves when you're calm, not when you're mid-trade watching candles tick against your bias. Think about how many decisions you're actually making in a single trade. When to enter. Whether to enter now or wait one more candle. How much size feels comfortable today. Whether to move the stop early because price hesitated. Whether to close partials because you're up and don't want to give it back. Whether to re-enter because you still believe. Each of those decisions drains clarity. Each one opens a door for emotion to slip in wearing logic's clothes. A complete trading system reduces decision fatigue to almost nothing. It doesn't ask you to be strong in the moment. It assumes you won't be. That's not pessimism. That's realism. The traders who last aren't the most disciplined people you've ever met. They're the ones who built frameworks that don't require discipline on command. They know exactly what happens next before the trade is even placed. This is where enforcement comes in, and it's the least talked about part of trading because it's not exciting. Enforcement means consequences. It means conditions that shut you down when you cross a line. It means limits that don't care about how confident you feel or how clean the setup looks. If your rules don't have teeth, they don't matter. And if you've ever broken a rule and immediately placed another trade afterward, you already know what I'm talking about. Here's something most traders never admit. They don't actually want strict structure. They want structure that feels optional. They want rules that make them feel responsible without limiting their freedom. And that contradiction is why trading stays messy. A real system removes freedom at the execution level so you can have freedom everywhere else. Freedom from stress, freedom from overthinking, freedom from the constant internal debate that makes trading exhausting instead of sustainable. You can feel this in your body when you trade. The tightness in your chest when you're in a position you shouldn't be in. The shallow breathing when you're watching price approach your stop and thinking about moving it. The relief mixed with regret when you close early and watch price continue. Those sensations aren't normal market stress. They're signals that your structure isn't strong enough to carry the load you're placing on it. A real system decides risk before opportunity. That alone flips most traders upside down. They start with how much they could make, then figure out how much they're willing to lose. A complete system does the opposite. It defines the maximum damage first and only participates if the conditions fit inside that boundary. That's not conservative. That's professional. Casinos don't focus on jackpots. They focus on risk containment and repetition. And the market doesn't reward excitement. It rewards survival paired with edge. The lack of enforcement shows up most clearly after losses. One loss turns into two. Two losses start to feel personal. The third trade isn't about the setup anymore. It's about getting back to even. And because your system doesn't force you to stop, you keep going. You tell yourself you're being resilient when you're really being reactive. A complete system recognizes that moment and steps in where your emotions won't. You don't need to be punished for mistakes. You need to be protected from spirals. There's a difference. Protection feels restrictive until the day it saves you from yourself. If your system allows you to keep trading after you've clearly deviated from plan, it's not neutral, it's complicit. And that's a harsh way to say it, but it's accurate. Your framework either guards your capital and your psychology, or it quietly enables their destruction. Most traders believe enforcement kills confidence. In reality, it builds it. Confidence doesn't come from winning streaks. It comes from knowing exactly what happens when things go wrong. It comes from trust in process, not trust in prediction. When you know that one bad decision won't cascade into 10, your nervous system relaxes. And when your nervous system relaxes, execution improves without effort. This is why copying someone else's rules rarely works. You copy the logic, but not the enforcement. You adopt the entry conditions, but not the shutdown triggers. You trade their system with your emotions and wonder why the results don't match. A system only works when it's built around your specific tendencies. Where you overtrade, where you hesitate, where you revenge trade, where you freeze. A real system doesn't shame those tendencies. It designs around them. You might be realizing now that what you've been calling discipline was actually constant self-control. And self-control is a finite resource. It runs out faster than you think, especially under pressure. A complete system doesn't rely on you to behave well all the time. It assumes you won't and limits the damage when you don't. That's not weakness. That's maturity. If you've ever finished a trading day mentally exhausted, even when you didn't trade much, this is why. You weren't trading. You were deciding. You were negotiating. You were managing emotions in real time with no safety net. That's not sustainable long term. And if you want this to be more than a phase in your life you eventually walk away from, structure has to replace willpower. Notice how none of this is about finding better setups. That's intentional. Most traders hide behind optimization because it's easier than confronting structure. It's easier to tweak indicators than to accept that you need hard limits on your own behavior. But the market doesn't care how optimized your entry is if your execution collapses under pressure. And pressure is not a bug. It's the environment. Chapter 3. Most traders say psychology is their problem, but very few are willing to look at what their behavior is actually saying about them. Not what they intend. Not what they believe. What they repeatedly do when money is on the line. A complete trading system doesn't just manage risk and entries. It exposes identity. It shows you who you are when no one is watching and the outcome matters. That's why people avoid building real systems. Not because it's hard, but because it removes the ability to hide behind potential. You can tell a lot about a trader by how they react after a win. Some get cautious, some get aggressive, some loosen rules because they feel ahead of the market. Others tighten everything because they're afraid to give it back. None of those reactions are random. They're expressions of identity under pressure. And if your system doesn't anticipate that version of you, it will be hijacked by it. Every time. This is where psychology stops being motivational and starts being mechanical. A system that only tells you what to do when things are going well is incomplete. The market doesn't reward consistency during comfort. It rewards consistency during discomfort. And discomfort doesn't announce itself. It sneaks in through confidence, boredom, impatience, and quiet entitlement. If you've ever felt like you deserved a win after a string of losses, that's not logic. That's your ego asking to renegotiate reality. A real system doesn't argue with ego. It ignores it. It doesn't care if you feel sharp today or foggy. It doesn't care if you're on a hot streak or coming off a drawdown. It treats every trade as one unit in a long sequence. And that's hard for most traders to accept because it strips away the emotional payoff. There's no heroic moment, no redemption trade, just execution or no execution. And that simplicity feels empty at first because drama has been doing the heavy lifting emotionally. You don't realize how addicted you are to emotional spikes until they're gone, until a trade hits take profit and you feel almost nothing, until a loss closes and you move on without spiraling. That calm can feel unsettling if you've been using trading to regulate emotion instead of generate returns. A complete system forces that realization, and a lot of people quit right there. Not because they can't trade, but because they can't sit with the absence of stimulation. Think about the version of you that shows up when you're bored. Not stressed, not angry, bored. The one that starts scanning lower time frames. The one that loosens criteria just to feel involved. The one that tells himself market participation is better than waiting. If your system doesn't account for boredom, it will slowly bleed you dry. Boredom is one of the most expensive emotions in trading, and almost no one designs for it. This is why time filters, trade limits, and session boundaries matter more than most traders want to admit. They aren't about optimization. They're about protecting you from yourself when nothing is happening. A system that allows unlimited opportunity during low-quality conditions isn't flexible, it's reckless. And if that statement makes you uncomfortable, it's probably because you recognize yourself in it. There's also the version of you that shows up after validation. The trade that worked exactly how you expected. The analysis you nailed. The comment someone left saying your call was clean. That version is dangerous too. Confidence can morph into entitlement without you noticing. A complete system doesn't let confidence rewrite rules. It keeps the same constraints whether you feel invisible or unstoppable. If you've ever caught yourself thinking, I see the market clearly right now, pause on that thought. That's usually the moment clarity starts to slip. Systems aren't built for moments of perceived insight. They're built for consistency across long stretches of uncertainty. The market humbles everyone eventually. The only question is whether your structure absorbs the hit or amplifies it. A lot of traders treat psychology like something to be mastered internally. Mindset videos, affirmations, mental toughness. None of that sticks without external constraints. You can't outthink a nervous system that's under threat, but you can design rules that remove the threat before it escalates. That's the difference between hoping you behave better next time and ensuring you don't have the option to behave worse. This is where journaling gets misunderstood. Most traders journal outcomes. Some journal emotions. Very few journal deviations. And deviations are where the truth lives. Not whether a trade won or lost, but whether you followed your own structure. A system that doesn't measure adherence isn't complete. Because without feedback, patterns repeat unnoticed. And what you don't track controls you quietly. A complete system also respects recovery. Not just financial recovery, but mental reset. There are moments when the best decision is to stop trading entirely. Not forever, not dramatically, just long enough to break a pattern before it hardens. If your system doesn't include conditions for stepping away, it assumes infinite emotional resilience. And that assumption has ended more trading careers than bad strategies ever did. You don't prove strength by pushing through compromised states. You prove maturity by recognizing them early and responding automatically. That response shouldn't require debate. It should be built in. When certain thresholds are crossed, the system closes the door. No exceptions, no pep talks, no one more trade. That's not discipline. That's protection wearing structure's clothes. If you've ever felt relief when your platform logged you out, or when the market closed before you could take another trade, that's a sign. That relief means part of you knew continuing was dangerous. A complete system gives that part of you authority without requiring collapse first. It doesn't wait for damage to justify restraint. Notice how this shifts responsibility without removing accountability. You're still responsible for building the system, but you're no longer responsible for winning every internal argument in real time. That's a losing game. Systems win by preventing the argument from happening in the first place. And once you experience that, going back to discretionary chaos feels unbearable. Like if you're still here, still listening, still uncomfortable in a quiet, productive way, hit like. Not as approval, but as acknowledgement. This chapter isn't meant to hype you. It's meant to narrow you, to strip away the false complexity and show you where the real work actually lives. And that work isn't glamorous, but it's effective. Chapter 4. Most traders don't realize their system is fractured because each part looks reasonable on its own. The entry makes sense. The risk percentage sounds responsible. The stop-loss placement has logic behind it. The psychology rules feel mature, but none of it is connected. Each piece lives in isolation, and when pressure hits, they start fighting each other. That internal conflict is what you experience as hesitation, second-guessing, and that heavy feeling in your chest right before you click the button. A complete trading system doesn't just have components, it has alignment. You feel misalignment when your entry tells you one thing and your risk tells you another. When your stop placement technically fits the strategy but emotionally feels too tight. When your take profit is based on structure but your psychology is screaming to exit early because you've been hurt before. Those moments aren't personal flaws, they're design failures. The system is asking different parts of you to operate under different assumptions, and your brain can't reconcile them fast enough in real time. Integration is the part no one teaches because it doesn't look like progress. It looks like subtraction. It looks like asking whether your entry style actually matches your risk tolerance instead of forcing yourself to tolerate stress you were never built for. It looks like admitting that a strategy that works on paper creates internal chaos for you specifically, and that admission feels like failure until you realize it's actually precision. A real system has internal harmony. The way you enter trades matches how you manage them. The way you manage them matches how you emotionally respond to wins and losses. The frequency of your trades matches your patience level. The timeframes you trade match your lifestyle, not the other way around. When these things don't align, trading feels loud. When they do, trading feels quiet. Not easy. Quiet. You've probably experienced this without realizing what it was. That rare stretch where everything just flowed. You weren't forcing trades. You weren't micromanaging exits. You weren't glued to the screen. And then something broke. Maybe you sized up. Maybe you changed time frames. Maybe you started trading more often because you felt in sync. That's not coincidence. That's you disrupting integration without knowing it. Most traders build systems like they're assembling parts from different machines. A scalper's entry with a swing trader stop. A conservative risk model with aggressive execution. A long-term mindset trapped inside short-term noise. And then they wonder why it feels unstable. A complete system is built from a single philosophy carried through every decision. One logic, one tempo, one tolerance for uncertainty. This is where copying systems fails hardest. You copy someone's rules without copying their temperament. You adopt their risk without their patience. You try to trade their frequency without their emotional detachment. And because it technically works for them, you assume it should work for you. When it doesn't, you blame yourself instead of the mismatch. Integration forces you to build inward instead of outward. If you've ever felt like trading takes more out of you than it should, that's misalignment. If you feel drained after a day with only a few trades, that's misalignment. If you feel relief when you skip a session instead of frustration, that's misalignment. These are not weaknesses. They're signals telling you something doesn't fit. A complete system listens to those signals instead of suppressing them with discipline talk. Integration also shows up in how you measure success. If your system rewards outcome more than execution, you will always be tempted to break it. If your metrics don't reinforce the behavior you want repeated, the system will decay over time. This is why traders feel proud after rule-breaking wins and crushed after rule-following losses. The feedback loop is backwards, and no amount of motivation fixes a broken feedback loop. A real system celebrates boring days. Days where nothing happened because nothing qualified. Days where capital was protected instead of grown. If that sounds unsatisfying, it means your identity is still tied to action instead of longevity. And that's okay to admit. Just don't build a system that pretends otherwise. Systems don't lie, they reveal. You can't integrate a system you don't trust. And trust doesn't come from theory, it comes from repetition without interference, from letting the process play out long enough that your emotions stop trying to override it. But that only works if the system actually fits you. Otherwise, you'll always feel like you're forcing yourself into someone else's rhythm, and that tension will eventually snap. Integration means your system answers the same question the same way every time. Not because the market is predictable, but because your response is. That consistency is what compounds, not just money, but confidence. Not the loud confidence that comes from wins, but the calm confidence that comes from knowing you're not sabotaging yourself anymore. Chapter 5. When a trading system is finally complete, the first thing most people notice isn't excitement. It's silence. Not literal silence, but internal quiet. The charts don't pull at you the same way. You don't feel that constant itch to be involved. You don't feel like you're missing something every time price moves without you. And that quiet can be unsettling if you've spent years equating intensity with progress. A lot of traders mistake that feeling for stagnation and walk away right there, convinced something is wrong, when it's actually the first sign something is right. A complete system doesn't make you feel like a genius. It makes you feel ordinary. And that's a problem for people who came to trading to prove something. To prove intelligence, to prove resilience, to prove they belong. When the system takes over, there's nothing left to prove on a trade-by-trade basis. The outcome of any single position stops meaning anything about you. And that can feel empty before it feels freeing. You stop waking up eager to trade. You start waking up neutral. You check the market because it's part of a process, not because you're hoping today is the day everything turns around. That neutrality is powerful, but it's also unfamiliar. Most traders are emotionally invested before the session even starts. A complete system removes that attachment. It treats trading like a task, not a test of worth. This is where boredom shows up again, but differently than before. Not the restless boredom that leads to overtrading, but a low-grade stillness that asks uncomfortable questions. If trading no longer provides emotional highs, what does? If you're not constantly reacting to the market, where does your attention go? Some traders don't like the answers to those questions, so they sabotage the system just to feel something again. They loosen rules, they add complexity, they increase size. Anything to bring the noise back. That's one of the quiet trade-offs nobody warns you about. A real system gives you results, but it takes away drama. And if drama has been fueling you, that loss can feel heavier than the financial gains feel good. This is why you see traders who were doing fine suddenly blow up after long periods of consistency. Not because the system failed, but because they outgrew the chaos and didn't know how to live without it. A complete system also changes how you experience losses. They still register, but they don't linger. You don't replay them mentally, you don't try to extract meaning from them. You log them, acknowledge them, and move on. Losses stop feeling personal because the system already accounted for them. When something is expected, it loses its power to destabilize you. This is where trust shows up in a tangible way. Not trust that the next trade will win, but trust that the sequence makes sense. Trust that you're not secretly gambling. Trust that even a rough week doesn't threaten the foundation. That trust is what allows you to step away from the screen without anxiety, to close your platform without wondering if you should have done something differently, to live your life without the market narrating your self-worth in the background. If you've ever finished a trading day and felt oddly proud even though you didn't make money, you've tasted this already. That pride didn't come from profit. It came from alignment, from knowing you did exactly what you were supposed to do and nothing more. That feeling compounds faster than money ever will because it stabilizes your behavior over time. A complete system also exposes impatience in a way that's hard to ignore. When the rules are clear and the frequency is low, waiting becomes the work. And waiting doesn't feel productive unless your identity has shifted from being a trader who acts to a trader who filters. That shift takes time, a lot of time, and many people quit during that phase because they mistake restraint for stagnation. The irony is that this is where growth actually accelerates, not in account balance necessarily, but in consistency, in emotional regulation, in confidence that doesn't spike or crash. You stop measuring yourself by how much you made this week and start measuring yourself by how clean your execution was. That metric doesn't fluctuate as wildly, and neither do you. You also stop talking about trading as much. Not because you're ashamed or uncertain, but because there's less to say. When something is working quietly, it doesn't demand explanation. This is why the most consistent traders are often the least visible. They're not selling an identity. They're running a process. And processes don't need validation. If this idea of quiet consistency feels appealing and terrifying at the same time, stay with that feeling. That tension is the edge you're standing on. And if you know you've been chasing excitement instead of stability, comment something honest below. Not for me, but for you. Naming the pattern is often the first step to breaking it. A complete trading system also forces you to confront time differently. You stop looking for breakthroughs and start respecting accumulation. Weeks matter more than days. Months matter more than weeks. And that long horizon changes how you react to short-term noise. A bad day loses its ability to define you when it's just a blip on a much longer timeline you actually believe in. This belief doesn't come from optimism. It comes from evidence, from seeing the system behave the same way across different conditions, from watching it protect you during drawdowns and limit damage when you're off, from realizing that even when you're not at your best, the structure still holds. That realization builds a kind of confidence motivation never could. You also become harder to shake, not because you're numb, but because fewer things threaten your framework. Opinions bounce off. New strategies don't tempt you the same way. Market narratives lose their grip. You stop reacting to what everyone else is doing because your system already answered the question of what you should be doing. And that independence is rare in trading spaces built on constant comparison. This is where many traders feel a strange sense of isolation. Not loneliness, but separation. You're no longer in the same emotional rhythm as most people around you. Their excitement feels loud. Their panic feels foreign. And while that can feel disconnecting at first, it's also a sign you've stopped outsourcing your emotional state to market outcomes. If you've made it this far in the video, hit like. Not because you agree with everything, but because you stayed present through something that wasn't designed to entertain you. Attention like that is a skill. The same one a complete system quietly develops over time. The final truth is this: a complete trading system doesn't make you special. It makes you consistent. It doesn't give you stories to tell. It gives you years back. Years you don't spend obsessing, second-guessing, or cycling through the same emotional highs and lows. And that trade is one most people say they want until they realize what it actually costs. It costs excitement. It costs ego. It costs the fantasy of being the exception. But in return, it gives you something far more valuable. Stability, clarity, a relationship with trading that doesn't consume you. And once you experience that, going back to fragmented, emotion-driven trading feels impossible, even if it once felt familiar. If this video helped you see trading differently, subscribe. Not for motivation, not for strategies, but for clarity. This channel isn't about doing more. It's about building something that finally holds. And if you've been feeling like your trading keeps slipping through your fingers no matter how hard you try, that's not a personal failure. It's a structural one. And structure can be fixed. A real trading system doesn't shout. It doesn't impress. It doesn't promise certainty. It just works quietly in the background, letting you live your life while it does its job. And once you understand that, you stop asking whether you're good enough for trading and start asking a better question: whether your trading is finally built well enough to support you.